What's up, guys? So in this video, I'm just going to be going over what equilibrium is. It's a very simple concept, so there's not going to be a lot of explaining that needs to be done within this video. Um, but I'm just going to be going over how I use it within my trading, how you can use it to your advantage, even if you don't trade like me, and just overall what equilibrium is. So just to get started, what equilibrium is essentially the 50% or the halfway mark of a price range that you are given. So like I said, without anything further being said, let's just say we're looking at price right here. We have this swing low right here and this swing high formed. If we mark from, like I said, from this swing low to this swing high, we have this dealing range that we're given, and this is the 50% mark of this entire range. What this is also known as is the equilibrium of the range, or this is where we could get the best discounted prices for a buying position. The same way that if I flip the charts upside down, if price was going down, this would be up in this portion of the range would be the cheapest area to get into a selling position. So, like I said, this will be the cheapest area or the best area that you can get into a buying position within the market, or to even stack onto a buying position that you could already be within. So let's say price right here retraced back down past equilibrium, like I said, which is this 50% mark of this entire range. When price retraces back into here, we can expect a continuation to the upside if we are bullish and if we are printing bullish price action. So it's not always going to respect it 100% of the time, but with the right narrative and having the right conditions, if price returns back into this equilibrium point, this is where we can expect a move back up to the upside. And now the way that I have this line marked up, it just barely comes into it and continues. That won't always be how it is. Sometimes price could come all the way down here, deep into equilibrium, deep into the price range, into a discounted area, and then we could make this move up. So what equilibrium is it's just giving us an idea if price is in a continuation phase or if it's still having a retracement back to equilibrium. So right here, within this price range that we have, we can tell price has not returned back to equilibrium yet. So we can expect bearish price action until we hit equilibrium. Once we hit equilibrium, we can then expect bullish price action. Because like I said, if we are bullish, this will be the best area that we can get into a buying position from. This is where the orders would be the cheapest, hypothetically, within the market. It won't necessarily matter to you because you're not buying, shares of this when trading futures or Forex, but what this essentially is just telling you is this is the best area to get into a buying position from. Um, so obviously we have that example. If I go onto a higher time frame, I'll be able to show a little bit of a different example. So let's go into replay mode. So let's say we were given this current price range right here. From this swing high to this swing low, or even from this swing high to this swing low, if we mark it up, either way that we marked it up, I'll just do it this way. This will be the equilibrium of our dealing range, or of our price range that we have, which is this 50% mark right here. So if we're looking to enter any selling positions, we would look for price to return back above this level, possibly to sweep out this high or tap into this fair value gap, and we could take price to the downside. So the way that you can use equilibrium to your advantage is essentially just, if we have not hit equilibrium yet, right? So right here, from this high to this low, we have not came back up into equilibrium yet. So we can expect bullish price action until we reach this point. So if we just keep playing price, we can clearly see bullish price action. We had buying positions all the way up until equilibrium. And so, like I said before, price will not always respect equilibrium, and it will not always respect the price range that you are given. So right here, if I were to keep playing price, we can see price clearly disrespects equilibrium and disrespects this entire price range. So we can see equilibrium was not respected here. But if we now, from this low to this high, we can see if price possibly retraces back into this equilibrium. Never did. So Like I said, it's not always going to happen 100% of the time. We definitely could still see a retracement back into here after creating these new highs up here. The market, you just want to, take what's given to you. You don't want to go too far into trying to predict price. You just want to, like I said, analyze and execute based on what is given to you, and really just nothing else, not anything emotional. So like I said, equilibrium, very simple concept. It's just essentially the 50% of the price range that you are in, and you can expect continuations from it. If price decides to disrespect equilibrium, that could be a sign that price could head to the downside and all of that stuff. Like I said, not always going to be perfect and it won't always respect it, but that is what equilibrium is.